All right, guys, back to work, back to work. Thursday is right around the corner. It's Wednesday evening, July 21st, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. And if you're watching for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a great video in store for you tonight. Charts are all ready in the background. As you can see, S&P's ready, Nasdaq's ready. Oh, you know, the gold is always ready, right? Glad to see you are ready right along with us. Got a great video in play for us tonight. Get some bull markets, of course, on the S&P and the Nasdaq. Would love to buy some dips. I wouldn't be afraid of trading some reversals on the S&P as well with, of course, the right reversal set up for tomorrow. We'll talk about that tonight in this video. On the gold, very bearish right now on the gold. Pretty much the exact opposite on the gold right now. Would love to sell some pops. Would love to sell some breakouts. So got some pretty interesting trades on our radar for tomorrow, whether you're trading gold, Nasdaq, or the S&P. By the end of this video, you'll know my favorite trades for tomorrow. You'll also know some trades to avoid, some traps to avoid, some problems to avoid if you're trading on your own or if you're trading out there with us tomorrow morning in our trade room. Before we jump into the video tonight, though, as always, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. I publish this video newsletter, my best trade ideas for the following day. I publish this every single day during the week. I don't want you to miss tomorrow night's video, so make sure you subscribe. Hit that little bell icon so you always get notified every time we publish something new. If you guys have any questions, drop those questions for me in the comment section. I would love to answer any questions that you guys have along the way. And if you tune in every evening, if you carve out some time to get your mind right and those charts right every evening, if you guys enjoy this video as much as I enjoy making it, do me a favor, hit that like button, that thumbs up here for me on this YouTube video. Really appreciate you guys tuning in every evening. So make sure you subscribe, hit that like, and drop those comments if you got any questions in the comment section below. But enough of the intro, though. Time is ticking. Thursday. I can't believe Thursday right on the docket, coming at us here tomorrow morning. What do we got going on right now? Trends, and some ranges, right? Trends and some ranges. Boy, those Eminis, not really much of a pullback today, right? E-minis, you can definitely tell it's summertime trading right now. Get that fluttering, kind of that grinding higher here as we go right now. As I mentioned in the introduction, I would love to buy some pullbacks. The S&P, I'll tell you, the S&P has potential for a much deeper pullback than Nasdaq right now. I would love to buy some pullbacks on the S&P. I would love to buy some pullbacks on the Nasdaq right now. I would definitely not shy away from selling a reversal off the high, right? We get some major levels of resistance up here coming in, so I wouldn't hesitate to sell a reversal. We'll talk about some reversal setups, some exhaustion patterns tonight in the video, and we'll also be keeping an eye out for some ranges on the E-minis tomorrow. You know, those sideways ranges have been pretty common here, especially when the market grinds higher like that. Like I mentioned earlier, I'm very bearish on gold. Gold is a very big move down into a trading range. I would love to get up around that 1810, 1812 and dump that sucker right back down again. We also got some pretty big targets waiting below, so I'm prepared to get aggressive on the gold if gold does make a strong move lower here. We got some support levels down below at 1790, but I'll tell you, there's some big magnets down there, and the gold looks very bearish right now. So definitely looking forward to some shorts on the gold. And you know me, right? Well, we'll talk about reversals. I could definitely see a chance to buy kind of the bounce reversal off of that low. So there's definitely plenty of buy side trades, short side trades on really all three of these markets for tomorrow. Speaking of tomorrow, though, let's make sure we're all on the same page here. Let's see what the schedule looks like for tomorrow. We didn't have any major news today, and you could definitely feel that in the market. Today was definitely a summertime trading day. Looking at tomorrow, we do have some more big news tomorrow. Maybe not the biggest news of the week. It's probably going to be on Friday, that PMI number on Friday. But I'll tell you, though, get the jobless claims tomorrow. 8:30 Eastern time. Got some wholesales tomorrow, right? 10 o'clock Eastern time. Those are definitely going to be two potential market moving events. You know, first of all, the jobless claims, everybody is expecting those jobless claims to continue to tick lower, right? I think it was 360 last week. I think they're expecting 350 this week. So, you know, if we saw jobless claims, you know, tick above 400, you know, something like that tomorrow morning, that could be the catalyst for that reversal, especially especially in the Emini markets, right, or in the gold for tomorrow. So again, we'll see. Jobless claims again expected to be kind of ticking downwards tomorrow. Will we see a kind of a surprise jump in jobless claims? And then of course home sales, right? Existing home sales. Now the last few reports have been pulling back, right? The excessively high prices, the incredible demand for homes, of course, driven the prices up pretty much every zip code here in the United States. We are anticipating a drop in home sales as well. Will that accelerate tomorrow? Will that keep bumping higher tomorrow? Will the market be surprised by that, right? That is definitely something we're watching for here tomorrow. And keep in mind, guys, we're not trading the news, right? I am not trading the news tomorrow morning in our trade room. We will trade the reaction to the news, right? So jobless claims come out at 8:30. We'll trade 8:40, 8:45, right? Home sales number 10 o'clock. We'll be trading 10:10, 10:15. In fact, as I've been telling you guys lately in the summertime season, the best trades we've been seeing lately between 9:45 and 10:45. We found some great trades this morning right around that 9:40 to 10 o'clock block this morning in our trade room. So if you can only be at your desk for an hour, right, that's definitely when you want to come out and join us tomorrow and every morning in our trade room. 9:45 to 10:45 is that kind of sweet spot block right now. We're seeing some of the best price action before things slow down into the lunchtime, summertime session. Now, speaking of trade room, don't forget, we get together and we trade this stuff together every morning at 8 o'clock Eastern Time, Monday through Friday. I would love to have you there right there with me. I'll put a button for you below this video tonight on the trading blog. I'll put a link in the description of the YouTube video. Grab that link, right? Grab that link, get registered, and I look forward to seeing you and trading along with you tomorrow morning in our trade room. Let's get back to our charts, though. S&P's here, Nasdaq's here, gold is here. Don't forget, I'm going to put some chapters at the bottom of this video, right? So don't forget, check out the chapters at the bottom of this video. I know a lot of you guys watch the entire video all the way through. That's why I love you guys so much here on this video newsletter. But if you don't want to plug around, right, play around, and go back and use those chapters, you're more than welcome to. Let's grab some S&P first here. Kicking off here on the E-mini, the most liquid of all of these markets. And we pretty much have, obviously, a bull market right now. You don't need me to tell you that. We have a relatively kind of, low volume, right, kind of grinding market here today. As I mentioned earlier, we were expecting to see a pullback, right? In fact, when I came in this morning and I saw that jump up, I thought, oh my goodness, we're going to get this beautiful pendulum swing, rotation all the way down. But you know what happened, right? The buyers came in at the opening bell and we pretty much spent the morning just buying dips, right? This morning in the trade room. So we definitely have the bulls here. I would say there are, the main component on this chart right now is going to be this spike in channel. We're definitely bullish. Buyers want to buy pullbacks right now. No doubt about that. But you have this kind of, strong spike up and you've got this channel. The reason why this is important is because anytime we have a spike in channel, what usually happens? We usually get a pretty deep pullback whenever we're seeing a spike in channel. And so you're expecting to get that deep pullback. You're expecting sellers, I would imagine, to come in and try to go back into that range, right? It's a big magnet down there into that range here, and that's exactly what we're looking for tomorrow. We can get the bears trying a couple times down here, right? We could buy right into those stop losses, right? Get a little short squeeze on that pullback. So if I had it my way tomorrow, that would kind of be what I would look to do here on this. Wait for that nice deep pullback, trap in some of those bears, and then hit them, right where it hurts, right? Buy into those stops and try to get that retest the high here. That's what, probably the best possible scenario here for the buyers tomorrow. As we go higher, you'll notice we got a lot of resistance up overhead. We have a bunch of different various types of resistance targets here between 55 and 61. Got a big major measured move up there at 65. And this is a big range, right? This is a big range. It's not the all-time high. The all-time high is right, where is it? Yeah, right up there, 84.5. So we still got some ways to go for the all-time high, right? But this is one big juicy range, right? We came from middle to early, right, last week here. So we're biased. We're bullish. We'd love to be a buyer right now. I think knowing we have a spike in channel, right? How would I buy it? How would I sell it? What if it goes up, right? What if it goes down? The first thing is what if it pull back, right? On a pullback on this. The biggest thing right now is if we see a shallow pullback, right? So, for example, as we pull back on this, if I see a shallow pullback and the price starts to climb higher again, right? Remember, we're anticipating a deep pullback here. What you want to look for a shallow pullback is called a trap entry, right? Traps are always the best whenever you're worried about buying high, right? I know we still have a lot of ways to go before we run into that major measured move up there. But if I see a shallow pullback right now, a trap entry is going to be my favorite way to do this. Now you'll notice we haven't seen any traps, right, pretty much the entire time here. So a trap entry will definitely be on my radar on a shallow pullback. If I see much deeper pullback, though, which again is kind of what I hope we get tomorrow, hopefully we'll see a nice big sell-off here in the overnight, and then when we come in tomorrow morning in the trade room, right, we've got this moving average coming over, and we can now look for, this is very important, this is a great combination set up here. When we get those deep pullbacks, right, into levels of support down below us here, what we can do now is the key is whenever you see a deep pullback like this, there are going to be a lot of bears, right? Especially with that range down there. So what you want to do is give them the benefit of the doubt. Let them try twice, right? Let them try twice, and then their stops are sitting right above that high, right? So now you know where their stops are. There are two ways to buy this, really. One is to find a trend line off those lows, right? Two would be just to hit them right into those stop losses, right? Now, there's a follow-up trade to this, okay? So again, you're buying off the trend line or you're buying the stop losses. There's a great follow-up trade for this, right? Which is you mark off the high, you mark off that low, and you grab that, right? You grab that first pullback, right? Now, when I say pullback, I don't literally mean like a pullback to the moving average here. What I'll do is, this is a 6,000 tick chart, right? It's a very slow time frame. I'm going to drill down to a much faster time frame, and I'm going to use what is usually my two most common price action entries are going to be traps, right, and failures. Now, failures oftentimes lead right into those pullback combinations, but I'm going to go over more of those details. We have a whole quick start class here at School of Trade. What I'll do is I'll put a link up there for you in the upper right-hand corner for that quick start class. It's a shortcut, right? It's a nice little shortcut. I wanted to give you guys something to kind of bring you up to speed with how I trade, what we look at, markets we use, time frames we trade off of, how to find support and resistance, how to trigger the entries. I don't use indicators, right? I just use price action because indicators, they get you in too late. I go over all those details in that quick start class, that link that pops up there. So that would be, again, that deeper pullback, right? Get those bears roped in, let them try a couple times now, hit them where it hurts, right? And then, of course, mark that new channel, right? Find that new channel by drawing it off the highs there and hit it again. Okay, these are always some of my favorites, right? Again, we call these two-try failures, and then again, we're drilling down to a faster time frame, and we're grabbing those bear traps, right? We're grabbing those failure patterns, right, coming off of the low of that channel. Now, by now, probably you're wondering, okay, how do we sell it, right? As the market rolls lower, can I sell this thing? Absolutely, absolutely. Now, the one most important thing about getting short on this is going to be waiting for the momentum to turn. Right now, momentum is just too bullish to want to sell this market. Right? I don't care where I am. I could be at the major, the biggest level of resistance we've ever seen, and I still can't get short on this until I see some either exhaustion or a reversal pattern. Now, there's two reversal patterns, right? We'll talk about exhaustion in a second. One of my favorite reversals is going to be that 1, 2, 3 reversal pattern. Now, what you want to do is, it doesn't matter so much about how strong the pullback is. The pullback leg is not the most important part in this particular reversal. What is most important is that jump, right? That jump off the moving average. When we get that jump, right, off the moving average, now you know that momentum has turned, right? And now you know where the bears are trying to get to. So what do you do now? Do you just jump in short down here? No. Mark up that low, mark up that high now, find that channel, and then again, we're going to drill down to a faster time frame, right? We'll grab one of those price action setups I was talking about earlier, right? The most common ones are traps and failures. We oftentimes see those failures turn into pullback combinations. And again, you'll know, right? If you've taken the free quick start class, you know exactly what I'm talking about. If you haven't done so already, you know where the link is, right? Link is right up there in the upper right hand corner. So we're selling off the top, right, of that channel. Now, that would probably be the easiest way to sell this thing short. But let's be honest, right? When markets kind of slowly grind like this, a lot of times they just fall out of bed, right? And if we get that falling out of bed, if we see a bunch of real strong red candles, the market accelerates going lower. What I'm looking for is, and this is one of the most common reversals you're going to see, right? So strong move down, shallow pullback, lower low in price. Okay, this is not a failure. Remember, because a failure would be come down, bears try once, right? That's a failure for the bears, right? To be a buyer there. Strong move down. We get a shallow pullback. That's the key. The shallow pullback drives the bears crazy because nobody can sell. You know, we're not pulling back to a 38.2. We're not pulling back to a 50 or a 61, right? We're not getting a very deep pullback. Bears are not able to get in. So what's happening is when that lower low hits, right, now they got strong move, shallow pullback, lower low, traps, right? Traps. Now, I'm drawing this channel, or I'm drawing this right here. This pattern right there could be down here. It really doesn't matter. The best possible scenario would be getting it just underneath that channel, right? That would be that would be beautiful, right? That'd be the best. But again, if it happens down here, strong move down, shallow pullback trap, don't hesitate, right? That is this can be relatively low because momentum is going to be, right, very bearish. So that's how I would look to short this thing, right, as we're going lower. And again, I've got those targets down, right, around the lows of that range here. One thing you do want to kind of anticipate, because it is summertime trading right now, and especially anytime we have a large move in one day, you have to anticipate a bit of a range tomorrow. If we do see a range tomorrow, how would I trade this? There are two ways you want to trade a bull market into a trading range. This is very, very important because most markets spend the majority of their time in ranges, right? At least these days. What you want to do is you first want to find the range, okay? Then find a support level below the range, okay? And there are two ways to trade this. One is to wait for a failure setup. And again, I talk about this in the quick start class, right? A failure setup where basically what you do is you wait for the pullback. You wait for those poor sellers trying to call a top on this to get short, and you simply buy into their stop losses. Now, the second way you trade this is you mark up the amount we went below the range. You project that to be the amount above the range. That becomes your target now. And what you do? You find that new channel, mark that new channel high, mark that new channel low, and you buy that next pullback to what I say, trade the rotation, right? Trade the rotation. You're trading that rotation, right, from the low of that range up to the high of that new pendulum swing. All right. Now, remember, I'm simply drawing on my screen on this, but if we go sideways here overnight, this is exactly what I'm looking to do here, right, tomorrow morning in our trade room, right? Again, it's a failure pattern below the low of that range, right, into, again, these failure into pullback combinations. They work really well. They work really well. And you know where the market wants to go at that point, right? It wants to go up, right, and take out that pendulum swing. So two ways I like to trade those bull markets, right, into a trading range. Now, the hard part. I know it seems like the easy part, right? But if you have any experience in the markets, you know this is the hard part. The hard part is trading it as it goes higher. When we are right up at these highs right now, right, there's no wiggle room. If anything spooks this market, it's going to pull back strong on us. So we got to be very careful about buying high, right? There's a reason why everyone says buy low, buy low. It's buying high. Buying high is zero tolerance, right? Buying high means there's very little wiggle room, right? Not a lot of profit left, big amount of risk required. One of the things I always tell my clients, whenever you want to buy high, you've got to wait for a pop, right? You got to wait for a pop. Not a pop, but a pop, right? The market has to pop. So, for example, I could see a pop on a pullback, right? A pop on a pullback, right? Like a pop like that. And if that's the case, mark the high, mark the low, drill down to a faster time frame, right? Buy that first pullback. I'm definitely not interested in buying that pullback right now. We're right up around major highs here. Call me a wimp, but I'm not interested, right? Like I said, I want to see a relatively deep pullback, right? I'll grab a trap, right, on a shallow pullback. I'm not too keen on buying that first pullback. Not going to be the most reliable trade. But if I can get a pop, right? If I can get that pop coming off that pullback now I know a follow-up leg is very, very likely. I get a pretty good idea of where that market wants to go. Now, we may not get the pullback for the pop, right? We may get the pop, right? The market may open up and it may just pop, right? And if that's the case, that's where you go when you use those 2-try traps, right? So pop up, shallow pullback, higher high in price, right? And trap. So if you're looking for the entry here, if you're trading overnight, right, you want to get what? That pop. Or it's got to give you that relatively deep pullback to let you buy low, right? We know where the market wants to go right now. Chances are it's going to keep on pushing. I would say if it keeps on grinding higher, right, you know that measured move there at 65 and a quarter will definitely be on our radar. It does seem to be a little bit unrealistic for the all-time high tomorrow, but these markets are just full of surprises, aren't they, right? They keep impressing us here time and time again. So definitely don't underestimate it. But again, pop, right? Remember that pop as we go higher here, all right? So now you guys get a pretty good plan, right, of attack here. One last thing here. How could I sell this market up here, right? If let's say we did go up here, right? How would I sell it? Well, the way I would sell it as it goes higher here is I would wait for what I call a bounce reversal, right? I would wait for the market to pull back, right? Retest the high, or at least try to retest the high, and then buyers once, buyers twice, and then you know what I'm going to say, right? Stops are where? Stops are right below those lows, right? This is that exhaustion I was talking about earlier, right? And you can hit them right where it hurts. Then we get the exciting stuff. Then we can mark that low, we can mark that high, and we can short off that high from there, right? Again, imagine now we go up, and I'll be honest, this could be go up, buyers once, buyers twice, right? Like that, right? We run up, major top overhead, right? Buyers try once, buyers try twice, right? All their stops now are sitting right below that low. I can draw a trend line off that high, right? I can short into stop losses, and I can then grab that channel. And again, as always, right? Drill down and get that short off the top of that channel. Buyers try once, buyers try twice. Trend line coming down, sell that trend line. Great trade. Short into stops, right? Great trade. And then even better, right? Even better trade is that, right? Is that first pullback, right? The first test is always the best test. Again, we're not going to trade this stuff off a 6,000 tick chart, right? We're going to drill down to a faster time frame. I cover those details, right, in our quick start class. And again, if this thing rolls over, right? If it rolls over here, you know where they want to go. They want to go back into that range, right, where we came from. So now we get a pretty good idea, right, for how this works and how this lays up. If you want to buy it, if we're trying to sell it, I would love that reversal off the highs here. But again, you got to wait for that one try, two try, wait for that exhaustion, right, and then hit them right where it hurts. Let's keep going here. Let's grab some Nasdaq. I'm sure there's something I probably missed in the S&P. We'll cover the blank spaces tomorrow morning in the trade room. Over the Nasdaq here right now. Nasdaq is definitely similar, right? But as you can see, it is a little bit different, right? There's definitely not as much potential for a really deep pullback right now on the Nasdaq, just because there really isn't that spike in channel. There was a spike in channel, you can see, right? And you can see what happens when you get those spike in channels, right? You get those deep pullbacks, right? And that run back higher here. So we know we're bullish right now, right? On the Nasdaq, just like the S&P, there is a major measured move overhead at that 858 level. I've also got a major top up there at that 69.5. That is a major top, right? It is a major top. You can also see, if I zoom out a bit further, you can see there's a big juicy range up there just overhead, right? So the S&P has a range. The Nasdaq has a range. Those all make for, right, pretty good targets. By the way, that's where I'm finding that big measured move from, right? That leg up, to that leg up, right? This is a classic Elliott wave, right? 1, 2, 3, impulse leg, 4 and 5, right? Waves number 1, waves 5, right, are usually very symmetrical. And to answer your question, that's about all I use of Elliott wave, all right? That's about all I use of Elliott wave. Elliott wave is great in hindsight, but it's besides what I just pointed out to you, that's about all I use of it. I'm kind of a mutt when it comes to, right, like a lot of traders, right? I combine all the stuff I've learned over the years. I take some here, I take some there, and it's worked out pretty well for me. So Nasdaq is bullish, as you can see here. We're trending. I'd love to buy some pullbacks right now. I would also not shy away again, right, for selling back into that trading range. You can see that juicy range right there, right, acting as a magnet here. I'll tell you a very similar situation here right now on the Nasdaq. As you can see, we have a relatively kind of narrow channel, I guess you would call this right now, pretty narrow channel, another low volume move. Very similar, right? If the market pulls back in the Nasdaq, right, into this channel low, I would love to get, right, the bears once, right, the bears twice, right, shallow pullback after a strong move down. That would be my favorite, right, a trade on a shallow pullback, be a trap, right, as we get that shallow pullback. If we get a much deeper pullback here on the Nasdaq, what's going to happen is bears are going to come in and try to use the underbelly of that channel, right? Let them try a couple times, right? So if we really pull back deep, right, let them try a few times. 1, right, 2, you know exactly now where those stops are, right? Once those bears try twice, I can draw a trend line off that low. I can draw a trend line, of course, right off of that new high. Again, you've got some really, this one of my favorite trades in our trade room is whenever I see a really deep pullback, right, moving average comes over, bears try a few times down here, right? They're trying to go back, of course, into that trading range. Their stops are sitting right above the high. We're buying the stops, right? We're buying off that trend line. We're finding that new channel, right? And we're drilling down and buying that first pullback. Right, easy stuff there as we pull back there. So very similar in that sense to the S&P. Would love to see a deep pullback, but with that deep pullback comes the responsibility of giving the bears the time they need to exhaust those lows. Waiting then, of course, once you get that trend line coming in, right, that nice strong signal, right, buyers are going to jump all over that, right? We're buying into those stops and we're buying that first pullback again. Don't forget, this is a 4,000 tick chart right now on the Nasdaq, right? We're not going to trade this stuff of a 4,000 tick chart. We'll drill down to a faster time frame, right? As always, we'll find our bear traps, find our failure entries, failure into pullback combinations, and of course, we're making that run right back up to retest those highs here. How do we sell it going lower? Very similar to the S&P, right? My probably favorite reversal trade would be that pullback, right? And now instead of the bears failing, the market rolls off of it, right? Remember, it's that pop, right? Remember that? Remember the pop, right? It's going to pop off that moving average. It doesn't matter how strong the pullback leg is. All that matters is that pop, right, off the moving average. Once you get that 1-2 pop, right, off the moving average, now you know momentum has shifted, and now you know exactly where they're trying to get back into that range here. Mark up that low, mark up that high, drill down to a faster time frame, and as I always tell you guys, right, that is the short that you do not want to miss, okay? You don't want to take the first one because we're too bullish, but when the market reverses with a 1, 2, 3, and we saw an example of this today about 9:40 this morning in our trade room. It was the opposite side, of course, right? It was the opposite side on the S&P this morning. But that you've got to find your way in on that pullback, right? That pullback is critical. And again, my two favorite ways to get in off of that are using those bull traps, right, and those buyer failures. Failures oftentimes turn into pullback combinations, right, and those strength setups, right? All price action based. We cover all those stuff, right, again, in that quick start class, right, linked up above. And then again, if we do just dump, right, if the market just simply collapses and runs lower here, then we've got a lot of momentum already, right? So, sometimes the market will just simply pull back and then it will pop right off the moving average, right? Sometimes what happens is the market pulls back, the moving average is right here, right? And it goes, nope, we're done, and keeps on going, right? And it drags that moving average down with it, right? That's how you know we have kind of a runaway market, right? Now what you do is you don't chase after it, right? You wait for the shallow pullback, you wait for the high, right, the lower low, you mark up that, right, that trap zone, and what I like to do is grab like a channel, try to find like a little channel like that, right? And then grab that trap up around the high of those channels, right? But the trap is the key, though. The trap is the key. That's where the money is, right? Right above that little shallow pullback high there as we go. And again, I honestly don't care where I take that trade. If you have enough momentum, I mean, we could be right into those lows for all I care. If you have enough momentum on this pattern, I don't care where we are, really. It's worth putting some skin in the game on it because it's such a reliable trade. We see these over and over again every day in our trade room. So nice, easy way to short that if we can get this bottom to drop out of it. Like I mentioned earlier, if the market does go sideways up here, and it might be up here too, we might have gone sideways there. If we start seeing the sideways range overnight, remember those two ways to trade it? Right? Two ways to trade a range-bound market. It's bullish. One is find support, right, underneath the range, like a prior swing. Always look for prior swings, right? Prior swings that make for great support levels below ranges, right? Wait for that pullback. Don't try to pick the bottom on this. Wait for those bears to come in and try to get short off the moving average. Once they do, they're sitting ducks now. I never try to pick the bottom, right? I always wait for the opposite side of the market to commit because their stop losses, their panic button is the fuel we need to run this thing higher. And then again, don't forget, right, let me zoom in a bit closer on this for you, right? As we pull back and get those bears coming in now, right, to get short, now again, measure this, right? Measure the amount we go below the range, measure above the range. That creates your objective, right? The market wants to get there. So then as we then punch back up here, now we mark up that high. And usually this move will be very strong, right? Usually that move will really pop because you've trapped in the bears are stuck, and now the market will jump. And when it jumps like that, again, sorry for the different colors here, right? You grab that new channel. And again, I'm doing this on the slow time frame right now, but you buy that first pullback. Right? And again, I literally have hundreds of examples of these same type of trades, right? In that quick start class, right? So I got a lot of examples of those, right? In that quick start class to trade this stuff. Again, this is the 4,000 tick chart. We're not going to trade on the 4,000 tick chart. Right? We'll go down to a much faster time frame on that. And then let's see here. As we go higher, what was it again? The pop, right? The pop. So do we pull back and pop? Right? Does it pull back? Right? Does it pull back and pop? Okay, if that's the case, we have a strong leg. Anytime we see a strong leg, it's almost a guarantee you can at least get the first target, right, on that first pullback. Right? So we see the pop off the low. That creates basically a 1, 2, 3 breakout pattern, right? You mark up that high, find that low, drill down to your faster time frame, trap in those bears with bear traps, seller failures, and then buy the pullbacks right off the moving average. I go over all those smaller details in that quick start class, right, that I keep mentioning in the upper right-hand corner. Or if it just pops, right? Let's say it opens up and just pops, right? It just runs. Now, remember, when I say pop, you're going to feel it, right? You're going to feel it. I always tell my clients, when you get the pop, it's these big breakout candles, right? It has a personality to it. We'll talk more about kind of what to look for on that in that quick start class. Excuse me. But the pop, right? It should pop higher, shallow pullback, higher high in price, and again, there's your trap entry. And again, I really don't care where that trade is. If we have enough strength on that pop, right? If we see enough strength popping higher there, right? That shallow pullback drives the buyers crazy. The higher high in price confirms it. There's that trap below that low here, right? And then where would my target be? Yeah, target is, of course, at that point, if they're popping like that, big range, right? Big range target there at 14,922 overhead. All right, guys? So we got a pretty good idea there, right, for how to buy it as it goes higher. How do we sell it as it goes higher, though? Well, same thing as before, right? If we run up, right, we have to start seeing exhaustion, right? So you want to be at a major turning point. You want to wait for now, right? Now, the buyers are not going to pop and go higher here. What's going to happen is they're going to pull back, try once, and they'll stall out and go lower. Okay, at that point now, trend line comes down. That's the secret weapon. Right, the trend line is the secret weapon because now those buyers are stuck. Right now they have to buy into that area now, and it ain't easy. Right, so now what you do is you wait for the buyers to try again. Right, again you get the trend line up there, stops sitting right below those lows. Right, this is the buyers are cornered now. Right, the buyers are now in. The aggressive buyers are in. The patient conservative buyers are in. Right, the shallow pullback buyers are in. The deep pullback buyers are in. All their pain, right? All their pain begins right there, and then all of a sudden they see that big fat juicy candle. If most traders are going to go, shoot, I'm on the wrong side, get me out, right? Where they stopped out or they take themselves out. And that's why this thing oftentimes will really punch, right, and run down off the trend line into those stop losses. And then again, right, we're marking that low, we're marking that high. Right, and we're getting short. Now, a lot of my clients will, and I'll tell you the same thing I tell them, you may not be confident in shorting that top. I get it. I get it. You may have been burned a few too many times trying to pick tops and bottoms. This is a great, kind of exhaustion reversal here. If that's the case, though, if you don't feel comfortable selling the tops there, right, you got to grab that reversal, right? You got to grab that. You got to grab that reversal. And I'll tell you, a lot of times what will happen is it'll do something like this. You'll actually get that little two-try trap that I keep talking about, right off that same spot. You know what I mean? It'll pull back and hit the trap too, right? I don't want to give away all my secrets here in this video. I cover a lot more of this stuff, of course, in that quick start class, but that's good money right there, right? Again, you're selling the failures, right? You're grabbing that roll over, shallow pullback trap, hit it. Do not miss that short, right? That short right there. That is your number one job, right? If you don't do the short off the high here. And again, we know where, right? We know where the range is down below. All right, guys. Again, I'm sure I missed a little bit here and there on the Nasdaq, but we'll cover the details more tomorrow morning at the opening bell in the trade room. Let's keep this party rolling on the gold here. Yeah, I'm very bearish in the gold right now. I am more than willing to be convinced otherwise, but the chart right now does not lie. This market is a very bear market. The trend is very bearish. It seems that we've turned the corner. Not to bring fundamentals into this because fundamentals they're never really that reliable. But it seems that we've turned the corner in this whole Delta variant spook, at least for now, right? Markets kind of woke up early this week. They're all kind of spooked by this Delta variant. The vaccines are pretty incredible. They're, keeping the bulk people out of trouble, for the most part. So I think the world has kind of figured that out, right, by now. And it makes sense that the gold would also be a little bit bearish as we go here. So what's the key takeaways right now on the gold? The key takeaway on the gold is, besides the fact that we're so bearish right now, is we have a really, I think a really great situation right now. We have a bear market, obviously, that's now popped up, right, into a trading range. Now, if you've been watching this video up until this point, right, you kind of know, right, ranges are magnets. You can take the amount below the range, project that above the range. Okay, and look where that puts us. It puts us right around, combine that low, that high, and now puts us right around that major area, or what would be really nice resistance here up overhead. Now, there is going to be a trend line coming in off the low, but the trend line should be fine. We should be clear of that trend line. If you look at it, right, you get kind of this complex pullback. If we get lucky, we'll go right up, hit that top, right, and right back down again. That would be just bam. That would be the best possible scenario. And as you can see, this would also line things up with one of those 1, 2, 3s, right? And we can grab it on the way down again, right? So you can kind of easily see this coming if we can get that, or if we can get that pop. That would be kind of the best possible scenario here for tomorrow. Again, there is going to be a trend line here, but you wouldn't draw the trend line like that. You would draw it like like that, a bit steeper. So I think we're clear on the trend line at that point. That, in my opinion, when you combine the bear market with this range, along with this channel, these are probably the three main components, right? Channel top, great to sell short. Range tells us pendulum swing, resistance, right? Rotation back down again, and of course a bear market. How do we trade it? Well, if it goes higher here, you're going to see a lot of bears coming in there. I would imagine, right, trying to wait for those buyers to get caught, right, buying into the high of that big channel. That could easily set up for a failure, right, into pullback combination. Again, we've talked a lot about this already here, right, so far, right? I wait for the price to pop up. I wait for the buyers to commit on that pullback. Their stops, right, their pain is right there. So once you see that nice juicy red candle, right, you can short right into those stop losses, one of my favorites in our trade room. And then again, we'll drill down, and you want that short, right? You want that short off the top of that channel. If you don't like the failure off the high, as I've said before, right, drill down to a faster time frame. This is a 1500 tick chart right now. Drill down to a faster time frame, right? Faster time frame, find your bull traps, find your buyer failures, right? Your failure to pull back combinations, right? We see a lot of these, right? We see a lot of these up, failure into pullback combination, right? Failure, pullback combination. Drill it down, and that's what you want right there, right? Pop up, failure, pullback combination as we go down. Again, I'm not going to cover all the small details, right? But I cover those in our quick start class in the upper right-hand corner. Now, as we go higher here, what if the market really pops, right? Let's say that, for example, right? There's this level way up here, for example. So let's say, for example, right, the market, right, really pops, right? A good rule of thumb is if we get above that channel, what's going to happen is buyers are going to come in, they're trying to use that channel against us, right? They will. And so if we really pop up, right, what I'll do in that situation is I'll wait for exhaustion, right? Wait for the buyers trying once, wait to try twice, right? We've talked about this pattern, I think probably a dozen times today, right? But that's the sequence now that you want, right? You'll execute that, again, to try failure, that exhaustion failure into that first channel pullback, right, off of that high, right? So if it really pops, and again, a good rule of thumb is if we get above that channel top, if we really pop above that channel top, right, that will be how to sell it, right, as we go. Now, don't forget, if they pop, right, and they hold that pullback and jump off the moving average, yeah, I know. I'm gonna feel pretty foolish, right? Being so bearish in this video tonight. I'm kidding with you. Do not get married to a direction, right? For all I know, something happens overnight. Gold gets spooked, and we're ripping higher, right? So I would love to get that short, but I don't care what direction I trade in, right? It doesn't matter to me. If we see it go up, pull back, and then jump. Again, I'm not gonna buy that first pullback. Right? That's borderline crazy right now. But if they can go up and hold that pullback, though, absolutely, I'll mark that high, right? Mark that low, and I will definitely be getting in aggressively, right? Find that trap entry, find that failure into pullback combination, right off of that low, and there's that range overhead. Right, there's that range up there, 1826, 1825.9, right? This nice big range up there, right, acting as a magnet. If something really went crazy, right, and the market really sprints, you know what I mean? What happens is the market jumps up, everyone's waiting for the pullback. It doesn't pull back, and it keeps on grinding, right? And the market grinds and grinds and grinds. When it does stuff like that, that's the situation where you go, okay, give me that trap, right? Give me that trap. Right. Again, it's a strong move up, shallow pullback, higher high in price. Right. That's where you grab those traps. Right. And if you're lucky, you'll grab that high right there, find that channel, and get in from there. Right. We'll obviously look for that tomorrow morning if we set stuff tomorrow morning, right, in the trade room as we're going higher. If it starts to grind, though, as it goes, find those traps, baby, right? Find those traps. You know where it's going, right, at that point now. Now, what if we go sideways here? If we go sideways, you don't want to do anything here, right? If we go sideways here, the plan still stays the same, okay? Everything stays the same going higher, right? In fact, it's even easier, in my opinion. If we do go sideways there for a while, it's even easier because then that rotation isn't as strong. right? If we go, the longer we stay in that range, the more magnetic that range becomes. So we'll execute that same failure into pullback combination strategy off that high. The hard part is going to be as the price goes down, right? As the price goes lower. Now, as the price goes lower, the bears want to retest what? They want to retest that low. So if they make that move back to that low here, right, the buyers will try to come in and buy this. So what you want to do is, as you're going lower here, there are remember, you want to wait for what? The pop, right? The pop is the key here. So let's say, for example, we go lower. How do I sell it? Two ways to sell it. One is that strong move down, right? Shallow pullback, lower low in price, and trap. I wouldn't be worried about taking that trade. I wouldn't worry about that trade. What I would want is I would want to see it. I'd want to see it ideally before we get down to that low, or I'd want to see it push through that low, right? Remember, if you have enough momentum on this, you're gonna be fine by it. So strong move down, shallow pullback in. When I say shallow pullback, it doesn't pull back into that moving average, right? It's a shallow pullback. That trap high is money, right? Off of that high. Targets are down around those big lows, okay? Or it may simply take out that low, moving average comes over, the bears get short, they jump, right? Remember that pop? If they pop off the moving average now, just mark up that low, mark up that high, grab that first pullback, right? Again, drilling down to a faster time frame, and we're shorting right off those highs from there. Right? Makes sense? Same basic ideas we talked about quite a bit tonight on this video already. How do we buy this thing as it goes lower? If we buy it, we have to wait for what? Exhaustion, right? So we get the low. I want to take out that low, and then exactly right? Then it's going to be bears trying once, bears trying twice. Their stops are sitting right above that high now. Now, this could potentially lead to what we call a full rotation, right? So if we get that, right, if we get, again, that we call the two-try failure, we're buying off that trend line, right? We're waiting for bears to wrap that rope around their neck, right? We know where their pain points are. We're buying the stops. We're buying off the trend line. We're marking up that, right, that new channel now, and we're buying that next pullback, right? We're getting in off that channel. It could be a trap entry. It could be a failure entry. It could be a pullback entry if the channel's narrow enough, right, around the moving average there. We'll cover more of those details again, kind of what these specific entries in that quick start class. But you know where the market wants to go, right? Measure the amount down, measure the amount above, and that's what we're hunting for. Right? So you might easily get something like that where, right, it really runs, and towards the end of that move up there, you're grabbing traps up there too, right? You're getting that failure, right? First pullback, and then again, trap there to finish off the pendulum swing. Okay, that could be a really great, again, long off the low and trading that rotation. Got to be very careful though on that one, right? Got to make sure we get that exhaustion first. Because again, this market is very, very bearish right now. If things really get out of hand tomorrow, right? If things really get gross tomorrow and the market, 1, 2, go, right? We get that trap and it just starts to puke. If it really starts to puke to tomorrow, just mark up that low, mark up that high, right? And we're selling pullbacks off the high of that channel. That big range magnet, 1778.5, right, is a big juicy target there for the bears. And again, it is a very bear market right now. I am more than willing to be convinced otherwise. I don't care what direction I trade in, but if it starts to accelerate going lower, don't be afraid to start to hit it harder, right? Because they've got some big targets waiting down there for us as we go lower. All right, guys. Boy, what a great video tonight. How'd you guys like it, right? Hit that thumbs up button for me here. Give me a comment in the comment section. Let me know, guys. Let me know what you guys think about the video here tonight. Most importantly, though, make sure I see you tomorrow morning at the opening bell in our trade room. I'll put a button for you guys below me tonight on the trading blog. I'll put the links you guys need in the description of the YouTube video. Get registered. Don't miss tomorrow morning, 8 o'clock Eastern time. The good stuff is there. If you have any questions, don't be afraid to call the office. That toll-free phone number is always there for you. I got live chat on the left. I got live chat on the right. And as always, you can always post questions in the comment section below. That will do it for me tonight. Thank you so much for tuning in. We'll see you guys tomorrow morning at the opening bell. If not, you better come back and see me tomorrow night for the next edition of our nightly newsletter. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time, okay? Bye-bye for now.